especially for the defeed channel. Bitcoin's been looking a little weak lately, right? It's been taking a hit, and that's got pretty much everyone asking the exact same question. Is this it? Is the bull run over before it really got started? Or is this just the quiet before the storm, before the next truly explosive leg up begins? Well, let's dive in and see what the data's telling us. See, the charts right now are flashing some seriously rare signals. And I mean, the kind of signals that in the past have only shown up right before massive, massive moves. So we're going to break down a really clear framework that'll help us cut through all the day-to-day noise and focus on what really matters, the big picture. All right, so first up, let's talk about a concept from the macro investor Raoul. It's a fantastic name. He calls it the banana zone. And what is the banana zone? Well, it's exactly what it sounds like. It's that final, absolutely exponential stage of a crypto cycle where prices just stop making sense. They go completely vertical. It's that face-melting rally that everyone dreams about. But here's the crucial part. It's not just some random, chaotic event. It's actually a predictable two-phase pattern. Okay, so take a look at how this works. It's broken down into a couple of key steps. First, you get phase one. That's the initial powerful surge that breaks the old all-time highs. Then comes the second step, the correction. This is that pullback, that sideways chop that feels awful and is designed to shake out all the fearful investors. Sound familiar? Because according to this model, that's exactly where we are right now. This means phase two, the final, most explosive part of the rally, the real vertical climb, hasn't even begun. And this quote from Raoul really just hits the nail on the head, doesn't it? It perfectly captures the psychology. When you're living through it, in the middle of these dips, it's so easy to think, oh man, it's all over. Everyone on social media is screaming that the top is in. But then, when you go back and look at the charts with hindsight, you realize, wow, it was just the market taking a breather before the next insane leg up. So that's the framework. But what's the engine that powers this whole thing? What makes this cycle happen in the first place? Well, I'll tell you, it's not just hype or memes. It's something much, much bigger. It's tied to the very pulse of the global economy. The real driver, the daddy of it all, is the business cycle. And if the business cycle is the engine, then the fuel for that engine is one thing: liquidity. We're just talking about the amount of money flowing through the global financial system. Think about it. When there's a ton of cash sloshing around and interest rates are low, that money has to go somewhere to find a return. And a lot of it finds its way into risk assets, like crypto. Now, this is where it gets really interesting. Look at this timeline. It's like a series of dominoes. It all starts with something called the GMI Financial Conditions Index. Don't worry about the name, just know that it's a forward-looking indicator. It tells us what's going to happen about 9 months ahead of time. And right now, it's already starting to ease, signaling that money is about to get cheaper. That, in turn, leads to more liquidity. And more liquidity, well, that's what kicks the business cycle into high gear. And this really paints the bigger macro picture, right? Everybody expects interest rates to start falling through 2025. Lower rates mean looser financial conditions, which means, you guessed it, more liquidity. And that liquidity is the lifeblood for Bitcoin's biggest rallies. Yeah, you're going to have temporary freakouts over things like government shutdowns and whatnot, but that's just noise. It's not the trend. Okay, so the macro engine is definitely warming up. The fuel is on its way. Now, let's zoom in a little and look at the charts, because they are showing a pattern right now that is one of the rarest we've ever seen in Bitcoin's history. So for you chart nerds out there, we're talking about Bollinger Bands. But for everyone else, all you really need to know is that they measure how much the price is moving around, the volatility. And right now, that volatility is being squeezed into an unbelievably tight range. It's like a spring being compressed tighter and tighter. And this level of squeeze, it's only the third time it's ever happened in Bitcoin's history. So what happened the last two times things got this quiet? Take a look. The first time, Bitcoin ripped 107% higher over the next 9 months. The second time, a 125% rally. You see the pattern here? This isn't just random chance. This is immense energy getting stored up, just waiting to explode in one direction or the other. And if that wasn't enough, we also have historical patterns, seasonality, on our side. We are just now exiting the historically weakest part of the year for crypto, August through October, and we're heading into what are usually the strongest months, November and December. Now, things feel a little delayed this year for sure, but the expectation is that as that liquidity starts flowing back in, this historical pattern is going to play out.
And what's really cool is that this isn't just some weird crypto-only phenomenon. Look at the Russell 2000 index. This is a basket of smaller, riskier companies. It behaves in the exact same way. It tends to rally hard into the end of the year, driven by, you guessed it, expanding liquidity. It's all connected.
So let's put it all together. We've got the big macro picture looking positive. We have some incredibly rare signals forming on the chart, and we have seasonality about to flip in our favor. So what happens next? How should we be processing all this information? Well, going back to Raoul Paul's point, he says it's moronic to say the cycle is over. Why? Because you'd have to completely ignore the macroeconomic data. The business cycle isn't ending, it's just beginning. And if the main engine is only now just starting to warm up, how can the crypto cycle possibly be over? So this really brings us to a choice. How should we process what's happening? Well, all the data we've looked at suggests that this is a time for a calm, clear-headed perspective, not a time for emotional reactions to short-term price wiggles. So let's boil it all down to the key takeaways. Number one, this doesn't look like a crash. It looks like a predictable pause, a consolidation within a much bigger uptrend. Number two, the real driver, global liquidity, is set to expand. The fuel is coming. Three, those rare historical signals on the chart suggest a massive move is coiled and ready to go. And maybe most importantly, four, the peak of this cycle could be much, much further out than most people think, maybe even into early 2026, which means patience and conviction are probably the most important assets right now, especially when the macro picture looks bullish but short-term fear is high.
Now, obviously, this is just a framework for analysis. It's a way to help you think through the noise, but it's absolutely not financial advice. You've got to do your own research and make your own decisions. That's all. Subscribe so you don't miss anything, and if you want more, all the links are in the description.